Welcome to the Wise Money Guys. This is Giuseppe Visconti. My co-host John Scambray is out for this week. Both John and I have been doing this for a combined 50 plus years, and we seek to help retirees or near retirement individuals and families live out their financial dreams. And how do we adjust for that, right? How do we make up and whether it's the market, it's the economy, different things that are happening in your life. Want to hit on the stock market sell-off. So to kick off, stock market, volatility's back. And then, the AI, which is still dominating the market. And we're seeing some disruption from that. And it's broadening the market, which is creating a healthier stock market, really, because you want a stock market that's broadening out. Within, other names out there, other sectors. It's taking some of the profits and then spreading some of those winnings. Everybody has a different timeline. Everybody has a different risk tolerance. Goals are different. And, we continue to just try and, pump as much information as we can, on our end to navigate the market as best as we can, find what's out there in the world of investments, to be able to custom tailor portfolios for our clients to help them achieve their goals. This is a speed bump, but I'm talking more of a systemic risk, which we saw more in 2022. And so we find ways of how can we best put together a portfolio? What are the investments out there? Let's diversify. But the short of it is to put together a portfolio that's going to give you the optimal return that's needed without taking the necessary risk, because that's then smooths out the line and it creates a more comfortable ride through your long journey throughout retirement. Overall, for the economy, and are we needing to pay attention to this? But because we've had some strong GDP, gross domestic product numbers come in, job numbers have been pretty strong. And you typically see that when there's volatility in the market, because then investors will flee to safety. It's definitely earned a place as another asset class within the investing world. We lead through financial planning, and that really sets the foundation of what's needed to get you from point A to point B. Are you on track to hit your goals that are important to you and your family? So same thing with your finances, right? They're very important to you. You've worked very hard to build up what you've had to build up. So a lot of people end up taking the standard deduction, unless you're a business owner. A lot of business owners will obviously do itemized. Another really big one is SALT, state and local taxes, which includes property taxes. Can I contribute towards it? Can I contribute to a Roth, or can I contribute to a traditional or my SEP? Answer is no. You have to have earned income, right? That's where we can help through tax loss harvesting. And so, tax loss harvesting is just a method to try and capture some losses to offset those gains. And so what we're trying to do is just to offset and shrink some of that capital gain. So then when you get your portfolio, or not your portfolio, I'm sorry, your 1099, it'll show, a less, lower capital gain, sometimes even a negative. And that's really the strategy around tax loss harvesting, and a couple different methods, right? Just we're in a little bit more of a volatile period currently. So, it's not going to be a smooth road. We are, optimistic about the market. We think there's room for growth, but it's different now. And that's the framework of what we work off of. And then the investment assets, morph to align with that plan. And that's really what it's all about. Hopefully this show was helpful and you found some interest. Hope you guys have a great weekend, and talk to you next weekend.